Welcome to the Kendall Report. As we come into the middle of May, we're seeing a lot of volatility last week, and it was all about inflation. I'll go through some details on what I think is still going to happen this week, but let's go back and review last week's activity. We saw a big rally back after some huge weakness on Wednesday. The CDC came out, changed some of the mandates, and the markets rallied very enthusiastically into Friday. As we look back at what happened, it was still a bad week. The S&P was down 1.4%, NASDAQ down 2.1%, and Russell down 2.1%. So the recovery did nothing more than put us in at the lower end of the expectations. I'll go through all these details here in a few minutes in the technical section, but the rally back was just a recovery grabbing onto the edge of the cliff. I talked about this through the commentary last week, but we're still locked in this sideways range. We went much deeper than I thought we would go last week. In fact, I had expected that the markets would move higher, and then everything changed as we came into Wednesday. The markets were already skittish when we came into the CPI numbers. Not only did the CPI numbers come in at a 6.2% year over year, the PPI numbers came in even hotter at 6.8%. And this really is a significant event, but the markets blew it off due to the CDC mandate change that they made. So everybody was very enthusiastic about the economy opening back up. But we're a long ways from anything really changing. The fact is that inflation did show its ugly head last week, in spite of what we saw happen in a 10-year trade up to 1.7, then back up to 1.63. There is still a lot of expectations for future inflation, and rightfully so. The supply chains continue to be very tight. We did see the Colonial Pipeline situation actually clog up the entire East Coast, and it's still trying to recover from the shortages that happened from that standpoint. And anytime you disrupt any kind of supply, it takes a while to normalize again. So I don't know how long that will be, not to mention that we have a major conflict going on in the Middle East right now, and anything can happen there. So there's plenty of things that could happen, could affect energy markets. There's a lot of potential volatility at the moment. There's going to be continued uncertainty around the markets, and this 4,200 level is proving itself to be very resilient. We've been above it a few times, and we fall right back. So we're in this broad trading range. We'll see what kind of pattern setup as we go through the week, but it does look like we're going to stay in this trading range. We're likely to see some early weakness as we come into this week. Let's take a look and see what's coming out this week. Empire State Manufacturing comes out expected to have a rating of 27. That's really not that big a deal. Housing starts are going to be big, up 1.75 million. The building permits are expected to show 1.77 million. There's nothing really out on Wednesday, and then we're into claims and the continuing claims on Thursday. And then the existing home sales come out on Friday, expecting to show 6 million sales. And I think the housing is going to be very impactful. That could set the tone for some things. We might see something happen just like what we've seen in trucks and autos where the chips are short. We might start to see some shortage, lumber continuing to be scarce. Maybe they can't get all the houses built that they need to build right now. In the housing boom, it looks like it will continue. At least the housing market will continue to be very tight. We also have earnings coming out, mostly mid caps coming out on Monday, 104 of them. Walmart, Home Depot, and is coming out on Tuesday. There's a total of 64 coming out. And we have 59 with Cisco Systems, Lowe's, and Target. So there's some retail folks coming out on Wednesday. That's likely to be somewhat impactful, along with some of the other economic numbers that are coming out on Wednesday. AMAT on Thursday and John Deere on Friday. In the total, there's another 100 or so earnings coming out. So we're winding down the earnings season. So that's going to be behind us for the most part after this week. It's really tough right now to see what the markets are going to be focusing in on, just because of everything I mentioned. But the Middle East situation can be very volatile, could cause some disruptions in crude oil. There's just a ton of things that could get emotional around the market. So there's uncertainty, and the market hates uncertainty. So look for some really choppy markets for the first couple of days of this week. Let's go ahead and take a look at the charts, see how they're setting up for this week. As I begin with the WaveTech Database review, we did see some selling as I expected on the intermediate models. There were 1,090 new sell signals and 104 buy signals. The percent bullish dropped from around 73% down to 70.5%, still above 68% and well above the 62%, which is really where it needs to stay to keep the intermediate rally going. So we are starting to see a little bit of rotation on the intermediate database. As I look at the daily database, you'll notice that we had a substantial amount of buy signals, 2,795 on the short-term models and 148 sells, so huge ratio. We've moved the bullish percent back to 40.25. It's rebounded quite nicely. We're still below that 42% level, which would suggest we're ready to go into a sustainable rally. This could happen from here quite easily, so I'll be watching those numbers and seeing how the markets are going to trade. As I mentioned briefly in the opening comments, we continue to struggle substantially right around the 42 handle on the S&P, and it looks like that will continue to be the case unless we start to see some traction on this database above 42%. As I begin with the S&P futures, they're down 550 right now. They were down to 41.55, about 7 handles more, about 12 to 14 handles lower on the session. We're seeing momentum just stall here, and I talked about this in the brief live stream that I did on Friday, is that my expectation is there's not going to be enough reversal of momentum to keep this market rallying from here. We should see a couple days of sideways action at least, possibly moving back toward the 4,100 level. As we look at the market grid for today, S1 is 41.47, so far 41.55 low. I'm looking for an R1 S2 level, looking for a little downside. So far the high overnight's been 41.78, so we're a long ways from printing a 41.90. That might be a long stretch to even get up there. We'll see if we can get any type of strength, but 41.90 will be the projected high, and 41.24 is the S2 level. Taking a look at the SPX, we came very close to getting an RXT sell signal at 41.74.15. We closed 41.73.85, just a few pennies below that, and it looks like we're probably going to get a couple days sideways, as I just mentioned, and looking at the futures. As we look at the market grid for today, S1 is 41.59, S2 41.42, R1 41.88. As I mentioned in the futures, that's going to be a little tough, I think, to get up to 41.88. It might be able to get there. I don't see us getting back into the 42 handle, which would be an R2 42.05. So as in the futures on the daily, looking for an R1 S2. Let's look at the weekly charts very quickly, see how they're set up for this week. And we did see that huge sell-off last week, and we traded down to the 40.56 level. 41.56 was STX, and as I mentioned in the opening commentary, what happened last week is all we did was rally to the bottom end of what the worst expectation was a week ago. So what I mean by that, last week's range, the low end of the range was 41.56. We traded 100 points below that, but we managed to close right at an S3 number. So we closed in the lower end of the expected range last week. I expect to see the market stay in this sideways range. As you look at the grid for this week, it's really looking at S1 is 41.47, S2 41.18. That's probably going to be the extreme for the week. On the upside is R1's 4,200, and that's going to be right at what I think we can do on the market. If we get above that, then 42.29, all of a sudden we're printing up and talking about new highs again. I don't see that happening, but certainly anything's possible with all the volatility, but we're seeing the momentum start to roll over, although it continues to be very robust. So the biggest number in the pattern right now is the 10-week moving average. It's at 40.93 last week. It is going up at 30 handles per week, so that's going to put us right into that 41.20, 41.30 range. I'll update that in tomorrow night's video. As I review the NASDAQ futures, they're down 625. They were down to the 13,340 levels, so they were down about 30 plus handles at one stage. They rallied back. We're coming in to about a half hour to 45 minutes before the London Open right now, and so we are seeing it fade back just a touch, but there's a lot of resistance here as we look at the daily. Is 13,652 is the 10-day moving average. That's going to be a fairly significant in the pattern. As we look at today's grid, the 10-period moving average is at 13,390. We have R1 at 13,470. I am looking for, like in the S&P, an R1 possibility of an S2. The low so far overnight's been 13,340, so we haven't quite printed an S1, but I do expect to see this thing backtrack a little bit, especially looking at the ppm1 at a minus 30 and ppm2 at a minus 0.22. So that's just suggesting that we're going to have quite a bit of resistance right here at this 13,390 to 13,649 is going to be extreme. I actually mentioned this on Friday's video that I thought we could rally back into those moving averages, and that's still a possibility. But just like with the S&P, we're not seeing the setup for a new rally to form from this range. The weekly charts are set up also very interesting. We do have trend levels on ppm1 and 2. ppm1 is at a 0.34, ppm2 is at 0.25. Those values are 15,524, 13,318, so we're just trading right in between those moving averages. It's likely that even if we get below this 13,318, that we'll see some rebound back in there. But as we look at the market grid for the week, the S1 number is 13,257, so that's probably going to be around the extreme. R1 13,516, and then R2 13,662. The setup is hard to determine at the moment, but it does look like we're going to hold these ranges and just continue to chop in the range. So on a weekly basis, we'll probably likely see an S1, maybe an R2 range for the week. The final market that I'll cover tonight is gold, and for the last several weeks I've been talking about gold moving up to the 200-day moving average. Well, we're finally there. That number is 1860. We've had a high of 1855.80. I think we'll challenge that this week. We're set up. The ppms have all turned positive. We've got ppm1 at a plus 0.34, ppm2 at 0.19. I suspect if we can get a close above the 1860, we're going to see a surge. If we look at the Fibonacci numbers, the next major Fibonacci number in the sequence is 1886, which would be a 50% retracement of the big decline that we saw since last August. Let's go over to the weekly chart, because that's really the big story that's being told here, is that the weekly chart you'll see is the 40-week moving average is very similar to the 200-day moving average. It's at 1849. We're actually trading above it right now. The ppms are ppm1 is very positive. ppm2 and 3 are all turning up. ppm2 is above its first second derivative. ppm3 is about to turn through its first derivative, and I've been talking about this potential breakout that is going to happen over the next couple of weeks, and I think we're finally there. As I mentioned, that 1886 is the next level. After that, we're into the 1900 handle, and I think we're going to be there quite quickly. This market looks very explosive, and on Wednesday's live stream, I'll go into a deep dive on gold because I think there's going to be something very significant. And this is probably going to be the backstory on this market is going to be the inflation expectations. Maybe we'll start to show where we expect to see it. This will complete the video for tonight. We'll talk to you tomorrow night. Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much.